morning, friends. We have come to the end of a week, which is really speaking saw a correction of around 2% on the Nifty, and in fact, it touched a 3-month low of 10,637. Now, a lot of repercussions have been kind of going through, especially on the backdrop of US and China trade war, and that seems to have kind of acted in a very violent way, especially in the Indian markets, in addition to the tax that has been levied by the government on the FDIs. On this backdrop, we feel that the following points should certainly be considered as we get into a new week, which could kind of give us some kind of relief, especially with the statements that have come from the finance minister and rollback of taxes on the FPIs. Now, what this week has brought through is a positive divergence on the RSI, wherein we have seen that the RSI has actually risen vis-a-vis the Nifty, which created lower lows on the charts. This kind of scenario we had also seen in the month of October of 2018, post which we saw around 10% of up move in the Nifty. Nonetheless, the difference lies in the fact that Nifty on a weekly scale has created lower top and lower bottom formation, and therefore extreme caution is advised while playing long, especially with news flows coming by every now and then. Having said that, let us now move on to the levels, and therefore 10,500 assumes an absolute significance, especially on the lower side, with good amount of supports coming through, with the consolidation zone that has seen it through December 2018 to March of 2019. On the higher side, 11,200 is the 200-day moving average, followed by a level of around 11,350, which assumes significance in the form of a retracement, a Fibonacci retracement at that. So certainly one can look forward to a bit of a sideways range coming through in between 10,500 on the lower side and around 11,200 on the higher side as far as the current week is concerned. The heavyweights especially have shown a lot of pressure, especially the likes of HDFC Bank, Reliance to that extent, and certainly could remain under pressure going ahead. The sectors to watch out for would remain on the IT, which should do technically well, having the likes of TCS and Infosys making new 52-week highs. On the contrary, metal would remain under pressure, especially with the weakness coming through from international markets. Going to stock specific front, we would recommend a buy in Asian Paint, which has closed around 1580 with upside targets in the range of 1630 to 1640, while on the lower side, good support would exist at a level of around 1558. Simultaneously, we would sell Just Dial, which has closed at a level of 682 with targets in the range of around 640 to 630, while on the higher side, the resistance is placed at a level of around 699. Thank you for joining us and hope all of you have a profitable trading week. Thanks a lot.